everyone, welcome to this week's edition of Midweek Market Update. I'm Ashley Rosser of Victory Fiduciary, and first off, I hope that you had a fabulous Thanksgiving time just last week. And so here we are, December 1st, and no better time than to talk about the potential of us having a Santa Claus rally as we come in already to the end of 2021. And so what we're going to talk about today is kind of like statistically why it's likely in our favor that we're going to see some strong year-end performance, as well as kind of why some of the recent market movements that we've seen are actually probably setting us up for this rally as we again continue through this month into the end of the year. So is Santa Claus going to come and visit us this year? That's what investors want to know. Are we on the nice list or are we on the naughty list? And if you follow my blogs, there'll be a new blog coming out tomorrow where I discuss just that in terms of the market. You know, there's kind of an argument for both, that we are kind of naughty and nice. And so let's talk about some of the reasons though why we are likely on the nice list. So number one, this is just a chart that shows average seasonality returns, excluding the year of 2008 because that was such a skewed year. But if you look at normal market years, and this would be beginning December, you can see NASDAQ, S&P, and the Russell 2000 all have significantly high, strong performance coming into the end of the year. And so just kind of looking at history being on our side there, that is kind of some encouragement for us. Typically, we do see strength. Now, if you remember what happened 2018, that was absolutely not the case. That was an anomaly that year, particularly Christmas Eve. Markets were absolutely decimated as the initial negotiations with China trade began to break down, if you remember when that happened. So that would be a year where Santa Claus absolutely skipped us and gave us coal that year. But typically, just looking at statistics, we will likely see strong performance coming into the end of the year. Now, what I'd like to do now, Black Friday this year, if you were following, you know that the market was actually in the red for Black Friday quite considerably, and there was a few different reasons kind of that all kind of came together. And you know, if you've been following us for the past couple of sessions, I've been saying that markets were extended, that they were deviated, and that we were likely going to see either some sideways trading or markets were going to need to pull back temporarily because we were just really extended. And so that happened on Friday particularly. So a new variant of COVID kind of came out. And now this is the first time though that we've seen COVID specific news actually rattle markets. For a while this has just kind of been priced in. So investors seem to be a little bit caught off guard by the fact that, you know, this variant is here, and the concerns were the unknowns of what's this going to do to affect the economy, affect our ability to continue to kind of move forward and make progress. And so that was a big part of what we saw. But honestly, as you remember, once markets have themselves set up in that nature, it just kind of takes a catalyst. It's kind of like everything was already there, and then it just needed that gasoline to be kind of thrown on the fire. And so what I want to show you here is, so just looking year to date of the S&P 500, just kind of like a visual of what's been going on. Here's our 50-day moving average. Here's our 200-day moving average. And so this was where we were moving in right before Thanksgiving, and then obviously then the sell-off that we saw. And so one thing though that I want to point out too that is interesting and important, our relative strength down here at the bottom. You probably can't see this on your screen. We were at like 74%. It's extremely, extremely elevated there. And so we're actually today trading at about 42%. That's a very normal number. It's kind of like an average number. And so, you know, every time we get to these extended periods, we can expect, at least temporarily, that markets are going to have to kind of pull back. And so that's exactly what we saw happen last week. Now then we had a little bit of a bounce on Monday. And then yesterday it was kind of right back to the same thing. We had a pretty significant sell-off yesterday as well. And so, again, I think just markets were still extended. Markets had not been able to really work off all that excess. And so today we saw a really, really strong opening. Then we kind of began to weaken as time went on. And so So while today we're positive, we're not, many indices were up over 2%, and we're now, those same areas are up maybe 0.5%. So in a normal day, that's a very strong day, but certainly we're still seeing kind of like some underlying concern and weakness within the markets to open up as high as we did and now to be trading a little lower. Another thing that's probably weighing on markets is just, again, the Federal Reserve, what they're going to do. They made some comments last week where kind of hinted to the fact that they may need to accelerate being able to begin to kind of pull back some of their interventions. And so that was likely adding fuel to the fire on Friday regarding, when we saw the pullback that we saw. So investors are kind of watching that. But so in terms of why we're on the naughty list right now, number one, inflation. That's kind of like the biggest, I would say, issue that's hanging over everyone's shoulders. Most will continue to say that it is still going to be transitory inflation. If that's the case, that'll be very good for the market. But right now, just weighing on markets in general is the fact that inflation's here. It is costing companies more to create the same goods that they were creating a year ago. Now, one thing, though, that is on the good list is the fact that for now, companies seem to be able to passing on those higher expenses to consumers, and they're getting by pretty well okay. Earnings that came out in last earnings season continue to be very strong. Another kind of checkpoint for the nice list with Santa Claus coming, just that companies are continuing to be able to meet and exceed their expectations. So these are things that are good. Investor sentiment remains very bullish. Momentum remains very strong. Remember that generally, for the time being, that momentum can actually continue to kind of drag markets either down or drag them up. And so momentum continues to be quite positive, which will likely allow us to kind of continue what the movements that we've been seeing. Now, what I want to show you, though, so this is the Russell 2000. So this would be small cap stocks. If you have any small cap exposure, you probably really felt this last couple of days. Very, very significant, particularly when we go back from last week into today. We saw a really sharp reversion. Although what I really wanted to show you is just the choppiness of trading that we have been seeing, really now for months. And so here our 50-day and our 200-day moving average actually touched, which is typically just kind of showing the fact that for short term we've seen a lot of downward pressure coming. And so it was just a very significant sharp reversion that we saw. Now, we actually came down to our 200-day moving average and then actually came below that, and then now we are kind of trading right on top of it. So definitely something to watch within the small cap stocks there. Again, I don't think that any trend has been broken there. Small caps in general tend to be more volatile, but they've really been the outperformers up until recently. So something just to keep an eye on for sure. That's really what I wanted to get into today. I think that with the movements that we've seen last week, I think they actually did us some good in setting us up to being able to have a strong finish for the end of the year. I think it gives markets a little bit of room now to kind of run. And so this is just the time to continue to be paying attention, always making sure that you know what's in your portfolio, why you're holding it, what its purpose is, and be prepared to cut it loose if it's no longer living up to the reason why it was added in the first place. As always, if you have questions for us, we always welcome your comments, your feedback. And this is my contact information, our website, victoryfiduciary.com. You can find all of our blogs there. And so I just wrote a blog today about the Santa Claus Rally, and if Santa Claus is going to be coming to Wall and Broad Streets. My email, ashleyart@victoryfiduciary.com. And we're always happy to help. We love being able to have that interaction. If you have ideas about what you'd like us to cover on a future episode, we would love to hear. Otherwise, happy first day of December, and we look forward to seeing you again real soon. Take care.